If we can figure out when price is more likely to hit here before here one time per day, that makes it possible to make $300+ per day, which is $9,000 per month. And I've spent the last 7 years of my life, thousands of hours behind the screen, studying trading to now be able to have $3,000 to $5,000 single profit days. So in this video, I'll give you a step-by-step of how to start with any amount of money and scale that up to $300 per day. But before we get into what we need to do to succeed, we need to cover what not to do that most failing traders do. All right, we're not bringing any of that energy into this video. We're starting with a clean slate. We're going to follow a proper structure so that we can actually scale to where we want to get. Okay, because trading is an open sea of infinite opportunities and combinations of actions that you can do to make or lose money. And in order to pull money out of this machine, it's up to us to set up very precise frameworks, or else we're going to end up giving money to the people that do. All right, because what most beginner traders are going to do is they're going to Google patterns and try to start immediately implementing these onto their charts without having this proper framework. So say we take an asymmetrical expanding triangle and we try to draw this out. Then we go ahead and buy once we see this pattern break out, and then the price immediately goes against us. And now we're in a big losing position. We don't know when to take the trade off the table, and we get scared because we're losing so much money and we think that the pattern doesn't work. Even though we had our idea, we didn't have a proper system to follow. We didn't have a precise way of entering the market and knowing how to manage our risk properly, and we're not tracking any of the data to be able to improve upon ourselves. Because if we're following all of our random ideas and we don't follow this precise checklist, we're gonna run ourselves into the ground, and we need to not do that. The way you're gonna start becoming consistent in scaling those per trade profits is by following a proper framework. You can't just be going by the seat of your pants and taking random day trades along the way. All right, so in contrast, this is a trade on LTC from a few days ago. And the first thing that I was looking for was for the price action to break below my moving average, move back up, and have all of my moving averages moving in the same direction. Okay, this was signaling for me to take my Fibonacci retracement from this high of my candle down to this low, which is going to give me a really nice potential support zone for me to start buying into. I then was evaluating previous support zones over in this region so that I could place my stop loss, which is going to contain my losses, so that if the price does move through and I am wrong about my trade, I keep the losses small and contained. And I ended up closing out this position right in this top region here for a little over a 1 to 3 risk reward ratio, which in the case of this trade, I risked about $500 to be able to make about $1,500. And this trade only took about 9 hours to complete. Now you might be thinking, how are we going to make $300 per day if we're starting off with a smaller amount of money? All right, now depending on the market that we're trading, whether it's Forex, whether it's crypto, there's several different options for us to be able to get access to capital. Okay, I'm primarily trading cryptocurrency, so we're able to use up to 100x leverage on cryptocurrency exchanges. So if we're dealing with, say, $100 to start, we actually sometimes have access to up to $10,000 to trade with. Now, there are risks involved with leverage, so don't just start jumping into exchanges and trading with leverage before listening to the section where I actually fully explain it. All right, but before we get into taking real trades, we need to get a few things sorted. The first thing is you need to practice and have proof of concept that you're going to be successful with your strategy before you actually end up putting real money into the market. If you don't have that, it doesn't make sense to be putting risk on the table if you don't understand what you're doing and you don't have the reps in. Okay, the second thing that we need to do is focus first on one single system. Okay, whether it's a system that I'm going to continue explaining in this video or it's another system, it's best to focus on one and master that before you start working on trading multiple systems at once. And the third thing is we need to be tracking our performance. All right, I'm going to show you exactly how I do it, and I'm actually going to share a template that you can download and use while you're practicing on your trades just to help you guys out. All right, so if you're in TradingView, you can click on this panel down here. You're going to see all the brokers that you can connect directly to TradingView. Okay, if you want to practice your trading, you can click on paper trading here and click connect. And now we're going to have a simulated account balance. We can also go in here and put in our commission, and you can also reset your account at any time. Okay, so then we can click on this trade button here, click on that again to minimize it, and you're going to have your own trade panel over here. All right, so let's now take a practice trade using the proper trading framework around a system called a trend continuation. I'm going to explain a little bit how the system works and show you how I follow the proper proper framework when I'm trading. So the first thing that I'm going to be looking for in this system is these 3 moving averages to be layered over one another. So this is a 20 EMA, this is a 50, and this is a 200 EMA. As soon as these cross in this order, I'm going to then go to the most recent high that was formed on the price action. These are the trade guidelines. This is the system that I'm looking to follow. Next thing that I'm going to do is take my Fibonacci retracement tool, and I'm going to click from this low part on this trend here back up to that most recent high level. Okay, I can drag this over like this. All right, and here are the settings on my Fibonacci. I have a 0 level, a 38.2 level, and a 1 level. And this is going to show a lot of times when we have a first initial move down where the price can come back up to before making a continuation of the trend. But this is only one step of the system. It's all about managing the numbers properly and making sure that you're entering properly. Okay, so this is where I can start building my system. So say I want to enter here. Take profit is going to be determined based on how the trend moves forward. We want to trend follow and let the market breathe and let our wins be open-ended so that we can let our winners run and keep our losses small. Okay, the next thing that I'm going to do is look at previous price action over here to try to find important areas to position my stop loss. Okay, most people make this mistake where they're just throwing their stop loss wherever they want. Say they want to hit a 1 to 3 risk reward. They'll put their take profit where they want and they'll just move their stop loss until they hit the right number. Okay, what I always do is I'm putting my stop loss on a place on the chart where it actually makes sense. Okay, and what we're going to look for, you can look for a bunch of different things. Something that I often look for is areas where the price bounces off previously. So we see this candle comes up, this candle's right here. We also see a bounce, a big drop, and then resistance all in this area. We also have resistance over here. So in this zone, there's a significant amount of resistance, right? So I'm going to want to position ideally my stop loss outside of this zone and make sure that I'm still looking at about a 1 to 3 risk reward if this trend continues to flip. Okay, here is where we can start building our position. So, okay, on your paper trading chart over here, we can select the sell button if we want the price to move down. And we're going to go ahead and punch in our entry price, which is going to be 76.65. All right, and then we're going to check our stop loss box. Okay, our take profit is still to be determined, so you don't need to check this box off. Don't worry about the tick levels. All we need to do is now look at the price, which is going to be 77.28. Okay, what that's going to do is open up this dollar amount risk box here, which is going to let us figure out how much money we're going to be risking if the price ends up hitting our stop loss. If you're not doing these two things, you can kiss trading goodbye. Most people who are beginning and a lot of people still don't follow this process, and it blows my mind. So in this situation, say we're risking $100 on the trade. That's going to show us how many units we need to enter at this exact price to be able to risk $100. All right, so then we can take our 158 units. We can go into here. We can go ahead and click sell. Then we can go ahead and play this bar forward and see how our trade would end up working. Okay, so you can see our price ended up coming off of our previous resistance zone here, catching resistance and then dropping through our trend. All right, now we need to be calculating where we can get out of this trend. A cool way that I like to do this when I'm trend following, okay, is switching to a 15-minute frequency from a 5-minute frequency. All right, so now we can wait for a candle close with a dark highlight strip on our 15-minute frequency on our Nevitrade Pro Plus indicator. Now, this is an RSI indicator. It basically shows us when charts could be overvalued or undervalued, so it's a good place to consider taking profits when you do get big moves in the market. If you want to get access to this indicator, it's in our resources section in our Discord. I will link the Discord below this video. So we got a candle close here, highlight strip here. We can go ahead and flatten this for about a 1 to 4 risk reward on our trade. Okay, so the next thing that we should be doing is scrolling out so that we can see the bigger picture and taking a screenshot of our entire chart. Okay, once we have our screenshot, we can go over to our trade journal, enter our screenshot, input the date, the ticker, whether it was a long or short, put in the P&L here, and that's going to show us all of our important information. So our total account P&L, our wins, losses, total trades, and our winning percentage. And it's important to follow the instructions here. So that way on this pivot table, you'll be able to see all of your longing statistics. So you'll be able to track your data here. You'll see all of your shorting statistics as well. And like I said, this is in the resources section of our free Discord. You can come in here and find all of these tools. Okay, so once you've practiced and you have your concept mastered, it's always good to move over to a real exchange and use a small amount of money just to get how it feels to interact with really using your own money. Okay, you don't want to get too complacent with doing bar replay because it is a lot different to use real markets. Okay, so for crypto trading, we have a bunch of options, but I personally use Bybit, and we have a partnership with Bybit because it's by far, in my opinion, the best cryptocurrency trading exchange. All right, so this allows us to trade derivatives, and you can see we actually have the capability to use up to 100x leverage. All right, and leverage, once we have our proof of concept, is going to allow us to start with a lot smaller amount of money, but still be able to take larger positions. So let me explain how leverage works, and then we're going to input an order on Bybit, and I'm going to show you how that actually works. Now, just because we can use 10x leverage, so starting with 100, we have access to 10,000, doesn't mean that we're risking $10,000 on the position. Okay, so let me explain. Say we wanted to get short on an expensive coin like Bitcoin, where the price is 42,000, and we wanted to buy right in this region, say put our stop loss right here. Okay, say we even wanted to risk $10 on this position. So if the price comes down to this red line, we're going to be risking $10. We would take our entry level minus our stop loss level right here. Then we would take 280.1, and we would take 10 divided by 280.1, which would give us the total amount of Bitcoin we would need to buy in order to risk $10 on this position. So if we take this current unit and multiply it by our entry price, that means that we need $1,503 worth of Bitcoin just to take a position where we want to risk $10. Now, this is why we need leverage. We're not using leverage to risk $10,000 when we only have $100 in our account. It's so that we can have different trade opportunities while we're still risking a responsible amount of money, and we have a process that we're continually following. Okay, because say we're starting with $10 and we want to buy a coin at $10. That means we'll have one unit here at $10. So price comes up, hits $10, we buy one unit. Okay, if the price of this goes all the way up to 50, now we'll have one unit at 50, and we will have made $40 in profit, and we'll have $50 total. Now, in order for this position to go to zero, it would need to start from here and move down to this zero mark, and that's how we would lose the entire amount of our initial investment. Okay, that's using no leverage. Say we did the same scenario where price comes up to 10, we have $10 in our account, but now we want to use 2x leverage. Okay, so we're using 2x leverage, meaning that now if the price goes all the way up to here, we're gonna have 50 times 2, so we'll have 100 minus our initial investment, so we will have made $90 instead of just making $40. But also in this situation, if the price moves down to the $5 mark, now our entire $10 is going to be lost. All right, so say we do the same scenario, but now we're using 10x leverage. Okay, so we're using 10x leverage, which means if the price goes up to here, it's going to be 50 times 10, so it'll be 500 total dollars that we'll have. Now in this situation, the price only has to come down by 1, and now our whole entire $10 will be gone. So if we're positioning ourselves responsibly, leverage is a great tool, but if you don't know what you're doing, it can work extremely far against you. All right, so if we go over to Bybit, say we want to take a similar trade, something like this, where our stop loss is right here, we would then do the same exact process. Say we wanted to risk $10 on this trade, we would take our entry level in gray minus this stop loss value down here. So now $10 divided by 136.8, and that's going to give us our total units that we need to enter the trade with, so 0.073. All right, so if we weren't using leverage, this position though, even though we're only risking $10, would cost $30,000, but using 100x leverage, now this position is only going to cost $341. Now, the only thing that you need to do with leverage is make sure that you're not going to risk liquidation. So you can punch in your leverage here, your Bitcoin quantity, and your entry price. And you want to make sure that this liquidation price is well below your stop loss value. So 41.9 would be down here, which means that we are safe from being liquidated in this trade. All right, so even if we're starting with something like $500, let's talk about how we're going to scale to that $300 per day. So if we're able to risk $50 per trade, once we have the proof of concept, and we have on average a 1 to 3 risk reward, okay, that means on our winning trades, we're going to be making $150 in profit. Okay, if we're able to find one single day trade on say a 5-minute frequency per day for 30 days, all we need is a 35% win rate, meaning we can be wrong 65% of the time. That's going to give us 10.5 wins over 30 trades and 19.5 losses. losses over 30 trades. So if we take 10.5 trades times 150 profit, that's going to give us 1,575 worth of profit. If we take 19.5 times the negative 50 per loss, it's going to give us a drawdown of $975, resulting in a $600 gain plus the 500 considering fees, which is going to give us right around $1,000. So in this example, if we start with the $1,000 and we have the proof of concept, we can risk $100 on these trades in order to try to make $300. So let's go through some bar replay, and I'm going to show you some things that I look for and how you can start practicing these trades and seeing where you really stand. Here's a really cool way to practice. So what I like to do is just click on a random chart and then hit the bar replay feature and just keep going back to an area where you have no idea how the chart actually looks. All right, and once you have your chart pulled up, you can just let it play forward and then start taking trades as they come, entering the market and getting a feel for where you actually sit. All right, so right here, I'm getting a break of trend, and right here, I'm getting my moving averages lined up. So all I need is to now see price action coming up on this trend, and we can look to potentially get into a position. So I'm going to click on my fib like this, stop loss outside over an important level, take profit to be determined. All right, so we just entered the market. Wow, actually perfectly. Now I'm going to switch frequencies, 15-minute, wait till we get a highlight. Boom, got our highlight here, position closed out for a 1 to 4 risk reward. Okay, so now we can keep going. So now I have moving averages crossing here. Maybe could have taken a trade there, but it's a little small of a move. All right, so once again, we got our moving averages crossing here. All right, we can start drawing out our position. So we adjust our fib to this level, would have gotten in right in this region, stop loss outside here. Price action is reversing. All right, so that's a loss. -1 on that trade. Let's keep going. All right, market's trending. We're not getting any pullbacks. All right, looking for a potential pullback here. Never got it. Price is breaking a little bit higher. Now we could be looking for a potential short position, never crossed. All right, so right here we have a position. The bars played a little bit quick. All right, so once again, bars crossed. We have our most recent low here. So from here over to here, start taking our position, stop loss underneath these critical levels here. All right, price comes down, rides off that moving average, tests our level. Okay, we're getting a nice move, switch to a 15. Wait till we get our highlight. We got our highlight close right on this candle here. That's giving us a 3.2. All right, let this play forward. All right, so we did get a moving average cross here. So I can swing from this low over here, short position, like to put it outside this high in the situation, take profit to be determined. Okay, so price comes up, fills us. Now it's continuing down in our direction. Price comes back up and stops us out of that trade. All right, so this is -1, keep going. All right, so this would have been a nice trade, but it didn't pull down quite far enough. All right, so right here we have our moving averages lined up with one another. So I can click along this high, low down to here, support level right in our EMA, take profit up here, stop loss underneath this important level right here, test our level again, and comes down, stops us out. All right, we got a break in price action, doesn't quite come up, continuing to move down. So this could be a potential short zone. So now we have moving averages layered over one another. We have our most recent high here. All right, so I already like the looks of this. All right, so here we have our moving average layered up again. So we set our Fibonacci up, stop loss outside these important levels over here, goes into our moving average, gets us filled, retests the entry zone, breaks that low. We can switch frequencies and we get our highlight right here on this candle close right there for a 3.7 risk factor. All right, and this is a lot of times the testing that we're doing on the private side of our team. We'll just go through the charts and test our theories. So if we have +4 risk factors, -1, we're still up 3. If we take 3.2, that's 6.2 -1, 5.2 -1, 4.2 plus 3.7 is 7.9. So that means positive 7.9 risk factors after taking all of these trades. Following proper framework and practicing day over day is how you're going to get to scaling to $300 to $500 per day. If you enjoyed this video and found value, make sure you hit the like button, subscribe to the channel if you like trading and investing. If you want to learn more about these trading systems, click the link to the video right here. And until next time, guys, I will see you all in the next video.